Good day and welcome to SEO Bricks Insight, where we bring you the latest news, information, and analysis on what's really going on in the world of the bricks. In my last video on Russian gold, I focused on an overview of how the industries developed from the 1990s to the end of 2021, and the role of the state, the consolidation of the industry under Polyus, and a group of second-tier producers. Today I want to look in detail at the role of the state and the banks in the Russian gold sector, which is much more involved in the sector than in pretty much every other country. Now, compared to Russia's role as a major producer of oil and gas, there's very little comprehensive information available about other Russian commodities around. So what I'm trying to do here is to fill in the gap with respect to Russia's gold sector, which has had an important role to play economically and politically for certainly well over a decade, and one that's certain to increase as the country seeks to respond to Western pressure and sanctions. Now, what I want to talk today is to give you a sense of the scale of Russia's gold industry. It's a major producer and will remain so based on its world-class reserves. Now, gold production has a special significance domestically. The state has been the most important gold buyer of Russian gold for the past 15 years as part of its strategy to build up its foreign exchange reserves, and basically had the first refusal on all gold actually produced. But it's also crucial in boosting state revenues since it's Russia's most valuable precious metals export. Now, from the West perspective, the prospects for the industry look negative, particularly without access to Western equipment and technology it's come to rely on. But Russia's endured these crises before, and the state needs gold as part of its response to the economic pressure. And it appears that China and other BRICS allies have stepped in to help with parallel imports, etc., to achieve a major part of the problem about equipment and technology. Now, Russia's most important natural resource-based industries are obviously hydrocarbons, agriculture, mining and metals. And around 40% of the country's GDP depends on hydrocarbons in any given year, which gives them a special status. It's also one of the most important exporters of wheat and barley, and now sells to grain to over 140 countries. Now, when the demand for minerals slumped at the end of the Soviet era, the mining and metals and the extractive industries then went focus on exporting. As the financial results were good, and they did this with pretty much a huge success. I mean, exports in 2022 topped 70 billion compared with 27 billion in 2000. In 2022, precious metals were the most important metals category with a value of 27.6 billion, or 40% of the metals sector. That compares to 29 billion for 20.9 billion, sorry, for iron and steel. And precious metals have also been Russia's fastest growing metals export, and they increased by 48% between 2015 and 2020, compared to just 2.4% for iron and steel. And most importantly, gold has increased in its price. Now, the 2-decade period of rapid growth, that means Russia is now one of the world's most important gold producers. In 2023, the world produced around 2,800 tons of gold. And plenty of countries contributed to that, but China, Australia and Russia were the most important producers, yielding 1/3 between them. Now, a year ago, the rate of Russian production increases led to the fact that predictions said that it would overtake China to become the world leader in 2025. And that's despite the fact that Russia has yet to exploit some of its most significant deposits, such as the Sukhoi log, which is the largest undeveloped gold mine, gold site in the world. Now, if you consider that as one of the major large-scale deposits that are very rarely found, the role played in Russia as a major gold producer will continue for the long-term significance in the world market. Now, What is interesting is the role of Vladimir Putin, and he's continually supported an economic bloc of senior officials, including Anton Silyanov and Elvira Nabiulina at the central bank, who've delivered relative fiscal stability through a series of economic crises certainly since 2008-9 to the imposition of first sanctions in 2014. Now, through the actions of the central bank under Nabiulina, Russia's sovereign gold purchases have been pretty high, but they represent only a wider policy of the reserves accumulation that began in 2006, when Russian state settled its external debts, and it's been a major priority for the team to become a net saver and build up reserves. In that year, Russia also achieved currency convertibility, and the ruble was currently pretty able to ebb and flow. So capital inflow increased, and the government's foreign reserves increased, partly as a way to cool inflation, which was well placed. Later, foreign currency purchases were made according to the central bank's so-called fiscal rule. This was created to protect the economy from oil price volatility prior to the situation in the Ukraine. Now, Russia's gold represents a fifth of its overall reserves in its asset portfolio. As Nabiulina stated to the State Duma on the launch of the central bank's annual report last year, it's crucial for our economy to have a diversified range of reserves. And since the imposition of sanctions in 2014, Russia has more explicitly framed its reserve accumulation as a calibrated hedge against external threats and sanctions risks. In practice, this has meant de-dollarization, and according to Nabiulina, the central bank reduced its portion of dollars fourfold between 2013 and 2021, and its goal to its share of over 20% from 8%. The share of yuan has gone from 0 to 37%, so you can see where everything's going. However, its reserves still remain diverse overall, and its hedging against the dollar in favour of gold and that was meant to prepare the country for the wide-ranging isolation from Western economies that it faces today. The central bank is now actively increasing its gold holdings even more in the face of the Western freezing of its foreign reserves. Now, Russia's determination to build up its gold reserves has shaped the development in the structure of the gold market and its interaction with overseas markets. I mean, until 2020, the state had first refusal on all gold produced in the country, and it bought all the gold from the domestic producers and at lower prices, so not to deter investment into their mines. Now, even if the state declined to buy any of the gold, the producers were still obliged to provide purchase agreements to both the Ministry of Economy and Economic Development, which theoretically allowed the state to see where the Russian gold production was sold. Furthermore, Russian mining law includes the concept of a deposit of federal significance, which in the case of gold refers to a vein load of 50 tons. Now, this limits the availability of such deposits to foreign owners and investors and producers. And the state's influence over the industry was also underlined by the fact that until 2020, only a limited number of preferred banks were licensed to trade gold and act as middlemen between the producers, the state, and third-party buyers. Now, this offered the gold mining companies many advantages, including financial support, a steady source of demand, and the convenience of leaving the transportation and the sale of the gold to the banks. It did, however, limit their independence and prevented them from developing their own customer base. In the 2000s, the licenses were only available to a small number of banks, although this later increased as more banks became under state regulation and control. Now, in the course of the consolidation of state control over the banking sector in the 2010s, some state banks gained special responsibilities for supporting the development of specific sectors. In the gold sector, the largest state banks share this responsibility: Gazprom Bank, Sberbank, VTB and Okry. They appear to have particular significant presence. Now, VTB appears to have a seriously outsized presence, and in what's happening in the gold sector over the past few years, and I'll cover that in another video, particularly on the mergers and acquisitions that have taken place in the gold mining sector. But VTB is the major player. Now, in March 2020, the central bank began to change course by suspending its bullion purchases on the domestic market, and this was probably due to its spike of the gold price when the coronavirus pandemic emerged, although the central bank did not link its decision to that event. However, a month later, the government began to grant export licenses to mining companies, and that allowed them to arrange their own sales rather than relying on the banks as intermediaries. Now, in the months that followed, the value of Russia's exports spiked, whereas in 2019, Russia's gold exports was 6.4 billion by the individual companies. In 2020, this tripled to 18.6 billion. So that's the effect of the central bank not buying the gold and stockpiling it. Moreover, 16.9 billion of these exports went to the UK, underlining the significance of that market for Russian producers. It also went to Switzerland, Germany, Turkey, Kazakhstan, and the United Arab Emirates. So they bought significant amounts of both value and weight. Now, as a consequence of this policy shift, there's no surprise that Russia's gold reserves didn't actually go up much for the first time in the last 15 years. Now, this situation changed dramatically after the ban by the London Bullion Markets Association on Russia and Russian gold, and it suspended the membership of the mining companies. And when the central bank stepped back from its role as a buyer of gold, the industry rapidly orientated itself to Western markets as opposed to China. Now, this made some sense at the time, although China is a major gold producer. It's not, in contrast to Western markets like the UK and Switzerland, a centre for gold storage and trading. Russia and China did sign a memorandum of understanding in the field of gold trading in 2017, designed to intensify their workings in the financial sector. And that enabled Russian players to enter the precious metals market at the Shanghai Gold Exchange, for example. But I mean, Russian traders were able to trade with China if the central bank didn't want their gold. Now, that didn't work too well until sanctions came in. And of course, they've now pretty much orientated themselves over to the Asian and Middle Eastern market. And I'll cover that in yet another video. Now, it's significant to see how Russia-China gold relations have developed over the situation in Ukraine. I mean, China's own gold stockpile is, they reckon, is 3.6% of its total range. And that's the lowest proportion among the world's largest economies. I mean, unlike Russia, which bought gold in proportion to its other assets, China has prioritized its foreign currency purchases, particularly in dollars and euros, in an effort to manage its currency support for its exporters. I mean, as such, China was not the first choice destination for Russia's gold exports, especially in exchange for foreign currency, which is, euros and dollars, which they prized more. Now that Russia's state banks are subject to sanctions and its foreign reserves abroad are being frozen, it's certain that Russia is going to increase its gold reserves even more. The central bank indicated as much when it started resuming domestic gold purchases in late February. So anyway, that's the role of the Russian state and the banks in the Russian gold mining sector. In my next video in the series, I will be looking at the regions, mining companies and minings across the country. Thanks for watching, and I'll be back soon. Please like and subscribe. Do visit the website, scobricksinsight.com, for a large number of articles on the BRICS, etc. Hope you've enjoyed it, and I'll see you all again soon. Thank you.